Hi everyone, my name is Ami Ben David. I'm going to I'm going to actually continue on the discussion that Anthony just had with Emmanuel and the rest of the team. Very interesting discussion. What I'm going to do is I'm going to take you through at least one of the use cases of digital securities, and we're going to go down deeper into that use case. And that use case is the tokenization and digitization of private companies and shares in private companies. So I'm going to put a presentation on and I'll take you through it. So again, this is going to be very relevant for CEOs, board members, executives, VCs that have portfolios and so on. And we're going to talk about raising capital for private companies and liquidity for private companies using the digital securities and security token technologies. So Anthony said this before as well. If you're a private company CEO or board member, you're familiar with this market where a public company can be traded online by millions of investors, but you usually see no more than 30 to 50 investors in a typical financing round. It's all done manually. And then when it's done, there's virtually no liquidity or very little liquidity. And we'll talk about the liquidity options that there are there, because there are some companies that are doing liquidity, but there's still a lot of friction in that liquidity. So there's almost nothing that's scalable in between until we actually digitize it. And as Anthony said before, when COVID-19 started, we were looking at what can we do as a financial industry to help private companies out of the crisis. That was something we thought about in the first month of the crisis. And we all talked about private companies having an issue, actually raising based on the old way of doing things, which is very manual, based on personal meetings. And when I used to raise capital for a company, I'd have to get on a plane and travel and meet people and so on. So everything changed. So with COVID-19 changing and creating this new normal where everything goes online, we had to sit and think, what are we going to do now? And that led to the creation of a group of financial institutions that came together to digitize private capital markets and create the digital securities network. In this group, we have over 70 institutions and tech companies that includes big banks, asset managers, exchanges, custodians, and so on. And what they want to do is work together in an open environment to help the private market become digitized and go online. So let's talk about this specific use case of digital security. So this network that is going to be built is going to connect, let's say in this example, investment banks, asset managers, and exchanges. Each one of these entities, financial institutions, will be able to bring assets, which is companies, into the network. So let's say if you're a CEO, your company will go there, and then they will expose this company and provide access to this company to their effectively hundreds of thousands of investors. So this is a way in which you can move from raising capital from 30 investors, usually be really dependent on the network that you have, which is in many cases local and potentially biased as well, and replace that with a digital network where a private company can raise capital from the entire market of eligible investors. And I want to stress, when I'm going to discuss digital shares in a minute, I'm not going to talk about public companies, and I'm also not going to talk about very early stage companies, because both these areas have solutions. In early stage companies, we have crowdfunding and so on, and public is public. But I'm talking about the companies, private companies in the mid stage, where they're already worth hundreds of millions of dollars. They already have revenues. They're either pre-becoming unicorns or they're unicorns already. And this is the area that we're talking about. So if you're a CEO of such a company and you want to raise a growth round, for example, what you're going to do is, in order to go digital, is there basically are three stages. The first stage is you already have a cap table, and your cap table have, for example, common shares and preferred shares. You keep those in place. What you do is you create a new digital share class in your existing cap table. And in that digital share class, you remove the trading restrictions. So no ROFRs, rights of first refusals, or any other restrictions from moving the transacting in the shares, so that transfer can be done immediately. And you might also make additional changes, like, for example, you might limit information rights to only above 5%, or things like that will make the digital shares viable for the company, but also for the investors. And then the third stage is that you raise capital on a global digital institutional network, and you raise it with those digital shares. You issue the digital shares, and that's what the investors are getting when they're buying them. So the result is what I would call a private institutional capital raise. We're not talking about public shares here. We're talking about a private capital raise. It's very similar to the way that you raise capital today. You have a cap table, but the only difference is that instead of the cap table being kept on an Excel sheet or being kept on a company service like Carta or something like that, it is actually being held on a digital cap table and can instantly be updated. What that means is that if somebody makes an investment in your company, then effectively 3 seconds after they make the investment, your digital cap table is updated and you have the money in your account that you can start using immediately. And that's down from effectively weeks that we see in the markets today. So this is the digital shares model. Now, as I said, the digital shares model changes the way that you can raise capital, but not only that, it also affects liquidity. So I'm going to take you through what I would call the elastic life cycle. So in the market today, as we know it, a company can be private, and when it reaches a certain stage, it can either go public or go through an M&A. These are the only options. In the new life cycle, a company can start private, then it can issue digital shares, and those digital shares can trade on an institutional market where all the investors are accredited and so on. So it's an exempt offering. And what you could do as a CEO or as a board, you have the freedom to also allow your existing shareholders to convert to digital. So you can say something like, founders can convert 10% a year, because maybe you don't want all the founders to cash out and run away. So, but you want to give them an incentive to do well. Or you can say the seed investors can recoup their investment, or whatever other method that you want to do, you have the option to do. Then when the company is ready and you can actually go into the next stage, you can either go full digital and stay within the non-public world. It's less expensive. You have to provide less information and so on, and you still have some liquidity in the institutional market, or you can just go to the public or M&A standard models. So, I'll go back again and explain. So first, you created a digital share class in your existing cap table, removed all the trade restriction, put it on a network that is run by financial institutions, and reach their investors through that network to create your capital raises. And then you're able to go in and create elasticity in your liquidity as well. I want to switch quickly to another screen and show you a short demonstration of how it actually works, because sometimes we talk about big things and big concepts and turning those manual processes into instant digital, but I want to show how instant it really is. So let me quickly switch you to a quick demo. And this is an example of in this case, we're talking about a company, and the company is called Eaglebase. The owner of Eaglebase can have information about the assets that they have, and in this case, they have a cap table. And in their cap table, you can see that there are two owners. One owns 46% and one owns 53%. And these are basically the owners of this company, Eaglebase. This cap table, this digital cap tables, is live. What is the meaning of live? It means that if one of those investors, like this is in the screen of an investor called Investor Fund, one investor goes inside to their banks or their broker or any screen of a financial institution that provide to their clients, and they can see their assets there. I'm not sure you're seeing my screen. I'm being told that you're not seeing my screen. Let me go back to the presentation. I was presenting, I was sure that everybody's seeing my screen, but apparently not. So what I was actually showing was how easy it is and how simple it is for an investor to view the offering of private companies, to make a decision, to click invest, and then it goes through automated AI system that checks the regulation compliance of that offering. And if everything goes according to plan, 3 seconds later, they're on the digital cap table. If the company is looking at the digital cap table, they will see that this client, this investor has now joined their cap table within 3 seconds. And that's very different from the way that private companies raise capital today. So I will go through the advantages of this and what we're trying to achieve. And I think some of it Anthony covered as well, but I will talk about it in the context of private companies. So as a private companies, if your due diligence was done separately with each investors across dozens of meetings and so on, in a newer environment, you will have one standardized data that you will share with investors all over the world. You can do Zoom roadshows, you can have structured, searchable data, and it's all digital. If the investor reach was based on meeting 30 or 50 investors based on your personal connections and the connections of your board, and a lot of cold calls and so on that get ignored, and CEOs know what I'm talking about. This is a way to get an investor reach that on a global network of effectively hundreds of thousands of institutional investors. If the legal or regulatory would require you to work with lawyers on every transaction, on every clause, with every investor, we will switch to a model where you publish the terms in advance and everybody either sign into them or not, and all the regulatory cover is done completely automatically. So this is all done through automated AI, simplified, unified, and a lot simpler to do. In terms of management, cap tables, we all know the Excel-based cap table, or even in automated cap tables, you still have to, when you do the sale of shares, there's a lot of management and a lot of work, and the life cycle is hard to manage. This is all digital and online dashboards, live cap table, completely new world. When we're talking about liquidity, we switch from a world where you have near zero liquidity to a world where you can have liquidity in a global institutional market. Now, to be clear, this is not going to be like Tesla type of liquidity. It's going to be more like SpaceX type of liquidity, meaning the company is not going to turn over hundreds of percentages every year, the entire cap table turning and changing hands. But the current scenario is zero or near zero, 1%. If you can get to 10% of liquidity, it means that founders can sell. It means that investors can sell their assets. It means that the whole market can be different. We can talk about it in a few minutes in our panel. And the last point is the distribution. Until now, most companies, when they do private sale, distribute themselves. The financial industry does not know how to help them. For the financial industry, working with a $1 billion raise is the same thing as working with same cost as working with $100 million or a $10 million raise. So why would they work with a $10 million raise? But when you automate everything, new business model emerge that actually enable the financial ecosystem to work with the company and help them. So I think that covers my presentation, and we would go next to the panel. Thank you very much.